Everybody, it's Shannon from AlphaTrends.net. Today is Friday, the 30th of June, 2017, and the quarter and first half of the year are now over. And not including any dividends, we're off to a great start for the year, much better than I think most people would expect. You can see in the negative column we have oil and the U.S. dollar, but besides that, all the major equities are higher as well as bonds. So the markets are have some strong wind at their back, but we've seen a little bit of bumps, which we can see right here in the weekly column, where the semiconductors lost 4.4% and lost on the monthly column as well. Oil was down this month as well, and pretty much we have a strong market. So let's take a look at it. This is the S&P 500 since the beginning of the year. On here you can see I'm using 195-minute candles, and the reason for that is just spaces them out a little bit better. There are 390 minutes per trading day, so that means that each one of these candles is of equal length. If we take a look at the volume weighted average price since the beginning of the year, you can see that that volume weighted average price has been significant. One other thing I want to point out here is this is the volume weighted average price, and you can see the name of it is Anchored VWAP by Alpha Trends, and that's on TC2000. So if you go in here and right click on this and click edit, you can apply that to all symbols. So any chart I pull up from here will have a year-to-date anchored volume weighted average price. The one that the level I thought might have held this week, but we undercut and closed pretty much right at it, is the volume weighted average price from May. However, from this low right here, you can see that we came down pretty much to the penny to the volume weighted average price from that level. So right now I think that this market going into Monday's holiday shortened week, and Monday is also a shortened day as well. The market closes at 1 p.m. Eastern and of course is closed on Friday. But going into Monday, this market is showing a little bit of indecision. We are on this 30-minute time frame, you can see below a declining 5-day moving average, and that 5-day moving average is where we found some resistance here today. So we've got to look at this market as still trying to, it fell out of the range that it had been involved in, and right now, it's still kind of flirting with that range, but objectively you have to say we have these highs and they are becoming lower, and we have these lows which we undercut and made another lower low. So intermediate term trend is guilty till proven innocent, meaning we don't want to trust the rallies quite yet for longer term continuation of the uptrend. But if we see further pullback, keep an eye on some of those volume weighted average price levels and this trend line in the S&P 500 as well. The long-term trend is still decidedly bullish here. We've got a rising 50, 100, 150, and 200-day moving average, and that is not the exhibit of a downtrend. The NASDAQ, for its part, came down to an important level as well. And let's go back to that 195-minute chart so we can see it with a little bit more clarity. And you can see I have a number of volume-weighted average price levels drawn in here. So let's just draw those in together. Since that first sell-off that kind of rocked the market a couple weeks ago, that volume-weighted average price is acting as a little bit of back and forth support and resistance. I had pointed out the potential for this head and shoulders pattern as it first hit this level, and I said I wouldn't expect it to unfold from there without a bounce up towards this level first. So now it's coming back down, and we have to take this seriously. If we take a look at the year-to-date volume-weighted average price, we're still well above that level. That would tie us in down at about 134 and a half-ish. So looking at some other significant levels, so a volume weighted average price from an event, you can see that this low right here in the first quarter, that's where this market is trying to hold. So if it can't recover in this area, then it's possible, and we continue to see 140-ish hold as some resistance, then I think we could drift back down towards 134. So keeping an eye on the daily chart with moving averages, the 50-day moving average is still rising, and it really makes it for a very difficult market right now to say here's what the alignment of trends is, because we don't have an alignment of trends, and that makes it confusing. The long-term trend still clearly bullish here above the rising 10, 20, 30, 40 week moving average. On the daily time frame, we're seeing some indecision, but we want to generally give the benefit of the doubt to the buyers with a rising 50-day moving average. That doesn't mean you buy there, because we have to look at the shorter term time frame and say we're making lower highs and lower lows below a declining 5-day moving average. So that means yes, we expect that the 50-day moving average is rising, therefore it should recover, but we don't have any evidence yet. On the intermediate term downtrend, we have a intermediate term time frame, we have a downtrend here. So if you think about the definition of a long-term uptrend, higher highs and higher lows, it is the sum of a bunch of trends. So the short-term trend tends to lead the long-term trend, and when we have an indecisive moment like we do now in this market, it tells us to be cautious. It doesn't tell us it makes sense to be, a strong buyer in here, not when with this intermediate term trend lower, and we don't want to be shorting such a strong uptrend on the weekly time frame. So the market is there for us to listen to, not to force our beliefs upon. And right now, when it says there's indecision, it means go slow. Take each stock in each market on its own merits. The Russell 2000 is still bullish. It's still holding up overall. We have a rising 10, 20, and 50-day moving average that we're holding above. It's kind of false starting in here, and it's kind of been doing that all year realistically, just a very choppy, slow uptrend. And I think as long as we're above a rising 50-day moving average, this will be an important level for it to hold. So looking at this also on a 195-minute time frame, we can look at the year-to-date volume weighted average price in this market and see that it's just been a big giant mess. But more importantly, the volume weighted average price prior to the election, that has been a significant level. So since the election, the volume weighted average price in here has been holding as support. So bias is still to the upside in the Russell 2000, but in a choppy way. The semiconductors continue to pull back in here. This group, looking again at that 195-minute period, you can see we lost a significant volume weighted average price level this week, and now we're going to look at that as potential resistance in the intermediate term. If we stay below that, then it's likely that we will continue down to the year-to-date volume weighted average price before the buyers, I think, have conviction to show up. And that's really not too far away. It's only down at $80, $80.15 per share. So not unrealistic to think that it can do that. And you have to ask yourself, personally, is it worth the risk to short this? For me, it's not. I'd rather just be on the sidelines in cash in regards to the semiconductors. The biotechs, however, this is, we've been talking about the biotechs in a couple important levels. One, it was the year-to-date volume weighted average price, and when it broke below that, you heard my skepticism that it would not hold, hold lower, that is. Instead, I thought that it would touch the volume weighted average price since the election and then turn into a bear trap. Well, that's exactly what we had here, and then we broke the trend line and buyers took control. Now they took control and pushed this market from 295-ish up to 322 and change, and that was a great that was a great rally. You can see here with this 5-day moving average, that's the orange moving average, that we rallied up, we broke support, and right in here, this is where the sellers took control of the intermediate term trend. Now we have the rejection at a declining 5-day moving average. We have this low and we have a lower low. So it seems to me pretty likely that in the case of the biotechs, what we want to be looking at now is the volume weighted average price since the most recent significant event, and that would be this bear trap shakeout. So looking at that objectively, we can see that it has the potential, I think, to come down towards this 306 level. If the biotechs drop down towards that 306-ish level where that volume weighted average price from the shakeout is, I think that's a very likely place for this market to find some support. We can also look at, since this recent move, the Fibonacci, that brings us down to 50%. If we break it back down to a Fibonacci off of the low, and I don't want to make this too confusing, but it's interesting to see that a 38.2% retracement off of this low ties in pretty close to that area as well. So there's a couple reasons to think that that 306-ish level would likely offer some support. It doesn't mean buy. I mean, maybe you want to buy a little piece just to, see if you can satisfy your ego and pick the bottom of the pullback, but more likely it's going to need some time to go back and forth and then get above that 5-day moving average. Financials, as noted, had a strong week. They did, in this market, we've been noting the year-to-date volume-weighted average price in here as well, and what we saw was that a couple weeks ago we broke above that and then pulled back, and that resistance at that volume-weighted average price year-to-date held as support. The market broke a higher high this past week, and now the buyers are back in control of the financials. Now maybe they need to settle down a little bit and then regather before they regather their upward momentum, but the financials from a weekly perspective clearly still have some room to run as well. The smaller cap banks, the regional banks, the KBE that is, here looking at this weekly chart, you can see they've done really a whole bunch of nothing here all of 2017. Looking at the year-to-date volume-weighted average price, you can see we're kind of fighting back and forth above that. I think though that the regional banks, if they get back above 44.40ish, 44.50ish, that this group could start to catch up as well. Citibank has obviously been a leader. It's up at multiple year highs in here, and close to decade highs, not quite, but one laggard in the financial brokerage has been Goldman Sachs. And if you look at Goldman Sachs, what you'll notice is that if we take that 195-minute chart and we go back year to date, you can see that this stock has been stuck since breaking below the year-to-date VWAP. It's been stuck below it, and it's had a negative trend. Things are starting to maybe shake neutral a little bit more, but in order to buy Goldman, I think you needed to see it come back up here, pull back, find support, and then have the confidence that the buyers would be back in control. If you look at some other interesting stocks with the volume weighted average price, I've mentioned numerous times the volume weighted average price on Nvidia since that earnings related gap. We touched it over here, we came close to it, and now we're right on that volume weighted average price. This to me is going to be an important fulcrum point going forward. If we can maintain above that, then it's likely to be able to continue. We've spoken, I've tweeted numerous times about Ulta and its year-to-date volume-weighted average price, and you can see how important that has been and that buyers have been showing up there. Now, is it ready to transition lower? That's anyone's guess, but so far year-to-date, it's paid to buy pullbacks to that level. If you take a look at Google, even Google is right now at the volume-weighted average price from this little low right in here, and the volume-weighted average price year-to-date down closer to 900 in Google. So maybe we see in Google a bounce from this level, and if that were to fail and break down, I think this would be the most likely level to close that gap. So this is the anchored volume weighted average price by Alpha Trends. I'm very proud to have my name on that here on this platform. If you're interested in it, let me know and I will set you up with this exact chart layout. And hope everybody has a safe and fun 4th of July. I'll talk to you next week.